what we're really seeing is that the proceeds are no longer going into treasuries. And so they're buying gold and commodities in place of treasuries. And there is no counterparty risk in holding gold. There is no sanction or confiscation risk in holding gold. And that's really what I think we're seeing in the treasury market, that look, Janet Yellen is screaming, take those assets and use it to build the Ukraine. Well, that's wholly hypocritical and not for the world reserve currency to be able to decide. I guess we all just need to do the best we can and prepare for the worst, hope for the best. And again, gold and silver that you're buying, that's not to get wealthy. It is because the biggest money in the world knows the playbook and is accumulating it methodically. So do the same thing.
As China acquired more gold, the country cut its holdings in the US Treasury to around $782 billion as of November, about 10% less than the previous year, the US Treasury Department reports. The figure is roughly $230 billion less than China's holdings immediately after Russia invaded Ukraine. Renowned financial analyst Andy Schectman is the CEO and president of Miles Franklin Precious Metals. Embarking on a divergence from traditional investment narratives, Andy Schectman states that gold has consistently outperformed the bond market, offering this advantage without the associated counterparty risk. Since the 1990s, gold has consistently outperformed U.S. government bonds, which are traditionally considered a safe haven. Still, it has yet to deliver the same performance for investors as equities shares, which are traditionally considered riskier investments. Furthermore, Schectman argues that the prevailing strong dollar is a brief illusion tied to nations settling debts, forecasting a substantial 2024 decline in its value. While expressing apprehension over geopolitical choices, he worries about seizing Russian reserves for Ukraine, highlighting potential consequences, including a U.S. dollar devaluation. The rising opposition to the global supremacy of the U.S. dollar is attributed to the perceived weaponization of the currency by the U.S. during geopolitical conflicts, exemplified in the freezing of $300 billion of Russian assets. This forced Russia to shift trade to alternative currencies and bolster its gold reserves as a strategic response. Schectman also introduces a thought-provoking scenario, challenging the notion that gold's prosperity hinges on the complete collapse of the dollar. He cites the doubling of gold over 9 years, while the dollar only saw a 5% increase. Now, we present the clips of Andy Schectman's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
You're looking at a large portion of the world creating a platform that would connect all of these BRICS nations together in a way for them to start trading in local currencies. And we're already seeing the fact that they are shunning the accumulation of long-term bonds, which really has allowed this country to live well beyond its means, and in favor of gold. And when you take a look at the performance of gold over the last 24 years, from start to finish, it's outperformed that of the bond market, while at the same time, no counterparty risk. And in an environment where we are talking of confiscating the Russian reserves, where the Treasury Secretary at a conference in Brazil is adamantly saying, we need to take those reserves, 380 billion, and use it to fund the Ukraine. This is a country that's lost its bearings. And I think the de-dollarization will only creep more and more and more and more, leading to a period of time where the dollar will continue to lose more and more and more of its value. The settlement in other currencies for all sorts of global trade in what amounts to a growing union that is already larger in GDP than the G7, and 35 countries have formally applied on top of the 10 that are already there. This is going to be an acceleration in de-dollarization, which will ultimately, as far as I'm concerned, end poorly. And I think it's important for people to understand that this is a trust-based system, and the U.S. hegemony is based on the dollar and our trust. And this empire that was established on the dollar, what will happen if the dollar is shunned? What will happen to the empire? I think people need to think about that. And look, confiscating a country's assets, in my opinion, is the first way to destroy the trust-based system. So this is something that will only continue, as far as I'm concerned, to fester. And I've been thinking about something, and I don't know if I'm way off base on this or not, but it's crept into my mind that the rising dollar that we've seen lately, to me, almost seems like a symptom of de-dollarization, where the countries that want to no longer be part of this game are doing all that they can to pay off or to settle their dollar-based debts to get out of this cycle, and then to borrow money or to transact business in other currencies, in other local currencies. So this strengthened dollar to me is an illusion, and it's very short term. And quite to the contrary, I think 2024 will show us that the dollar will lose ground, and I think substantially, not only in trade settlement, but ultimately in value. And I want people to think about something, in terms of what gold could really do. People think that the dollar has to be completely destroyed before we see this moment. But you go back to 2015, gold had just made a low, basically, real darn close to it. And the dollar index was at a 104. And if you go to where we are right now, 9 years later, gold has doubled and the dollar is only up 5%. And this is what I mean about the tortoise, not the hare. Well, what happens when the dollar starts to get clubbed and everyone starts dumping dollars? And you see that 54% of all the COMEX gold has been taken off the COMEX since February 2021. And I guess what I would say is that when gold starts to rise in your currency, despite, I guess we can even call it the illusion of positive real rates, which we've seen here, which we all know they're not real, but according to the lies that we get out of the CPI, okay, they're real. That means your government's got some serious debt problems if rates remain positive. And I don't believe you'll see rates fall one bit. Now you're beginning to see them taking that off the table and even talking about rate increases. You're beginning to see a steepening of the yield curve again, where people are shedding 10-year treasuries in anticipation, and 20-year and 30-year in anticipation of higher inflation to buy the short-term rates and the debt issuance of Janet Yellen and the spending. You're going to see, I think, higher rates on short-term treasuries and higher rates on long-term treasuries. And the bottom line is this is not good for the funding prospects of the debt and of maintaining it for Main Street.
During the interview, Andy Schectman hinted at a probable shift to a common settlement currency tied to commodities, echoing Sergei Glaziev's views. According to Glaziev, the BRICS common currency would be a dual basket monetary unit, with one basket containing the component currencies of the BRICS countries and the other about 20 exchange-traded commodities from oil to grain to gold. While criticizing Janet Yellen's geopolitical asset use, he advocated for a practical approach to local currency trading and gold accumulation. He applauds the BRICS cooperative strategy, foreseeing it as a challenge to American hegemony. The potential impact of a new BRICS currency on the US dollar remains uncertain, with experts debating its potential to challenge the dollar's dominance. However, if a new BRICS currency was to stabilize against the dollar, it could weaken the power of US sanctions, leading to a further decline in the dollar's value. It could also cause an economic crisis affecting American households. Aside from that, this new currency could accelerate the trend toward de-dollarization. Let's get back to the interview.
I think people need to understand that the fixation that we all have, and I've been guilty of it too, of a common settlement currency is something that really we need to kind of pump the brakes on and think about for a moment. I think that there's a high probability, just as Sergei Glaziev, I believe is his name, said, yeah, there's going to be a common settlement currency pegged to a basket of commodities. And everyone knows that gold was reclassified tier 1 and sees the central banks buying it, assuming that that's going to happen immediately. But I have, maybe another take on it, the more that I reflect upon it, and is that when you see all of these deals being settled in local currencies, that's what this bridge in essence is. It is a bridge, just like the Project M bridge, where we just saw China do this big trade with, I think it was, I don't even remember who maybe Saudi Arabia. I don't remember who they did it with just recently. In fact, I could tell you who it was with, but they just did this big trade using the M bridge. And the M bridge is a way for them to, let's see here, Bank of China did 14 million CBD settlement for overseas gold via the Shanghai Financial Exchange in December 2020. That's not it. 1 million barrels of oil from the PetroChina. They're using the M bridge. And basically the M bridge is the same thing here. It's just a digital platform that allows these central bank digital currencies to trade with one another, not using the SWIFT settlement system. So, and they're waiting to do it the right way, to list a common settlement currency, which will probably happen if they all agree in the meantime to trade with one another in their local currencies using this bridge platform, which supersedes the SWIFT. that's the first step at chipping away at the hegemony of the dollar, at the settlement status of it. But the fact that, what we're really seeing is that the proceeds are no longer going into treasuries. And so they're buying gold and commodities in place of treasuries. And there is no counterparty risk in holding gold. There is no sanction or confiscation risk in holding gold. And that's really what I think we're seeing in the treasury market, that, look, Janet Yellen is screaming, take those assets and use it to build the Ukraine. Well, that's wholly hypocritical and not for the world reserve currency to be able to decide. So I think that this is something that, if you look at it pragmatically, all of these countries trading in local currencies and using gold either as a balance of settlement tool, or just to continue to accumulate it instead of holding all excess reserves that are now being largely, or for a long time have been held in treasuries, now would be moved to gold and other strategic commodities. I think that will have a profound effect and will speed up the de-dollarization until ultimately they have not only mass adoption, but have thought it through significantly. How do we make it work? How do we pledge commodities, perhaps, or peg commodities to a distributed ledger? How do we show that? How do we give everyone equal say? And if you look at the way the BRICS are, they're very cooperative. No one is beholden to anyone else. They're all there at their own accord because they want to be. And the presidency rotates. It was in South Africa last year. It's in Russia this year. And next year it moves to Brazil as we continue to share power, or they continue to share power amongst the members. I think it's a system that is ideological, and it very, very well could work. But the one thing I admire the most about the way that they're going about their business is that they are making everyone think it's a giant nothing burger by not throwing everything in our face. They're slowly making relationships, accumulating commodities, shedding dollars, and building infrastructure to make it a really legitimate foe. And all of it being done in a cooperative manner rather than a coercive manner. I think it has great legs, and ultimately we probably will see a common settlement currency. But until then, the act of trading amongst themselves and using gold as a means to hold reserves is a huge chop in the legs of the stool, if you will, of the American hegemony.
Today, owning gold can hedge against inflation and deflation and be a good portfolio diversifier. As a global store of value, gold can also provide financial cover during geopolitical and macroeconomic uncertainty. How might these evolving global currency dynamics impact your perception of gold as a strategic asset in economic uncertainty? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.